Hello, fellow traders. 'Tis I, the Rumpled One. Sunday, July 22nd, the year 2018. Let's talk trading, weekly opening gap. But before we do, we're going to always employ our money and risk management. So simple to do. Keeps us out of trouble. And let's see, we can look here. The dollar yen's pulled all the way back into that wick zone. That monthly wick zone right there. Okay, we've got some open pivot or open gaps right here. We got the yen. We've got the New Zealand yen, New Zealand franc, the euro New Zealand, the euro Aussie, the Canadian Japan, Canadian franc, and Aussie yen. Let's look at these because somebody said that it didn't look like the program or the dashboard was doing this properly. Well, you can see that gap hasn't filled. Actually, we need to look at them all because they said some were reported filled that weren't. Okay, that gap filled. That gap filled. Just run down the line here. That gap's open. That gap filled. And you can see right here, there's the close, there's the open, it filled. You can see almost no cigar. The close was 558. The high is 571. No, let's see. 75588. 75571. So see, that gap did not close. You can see here, not closed. You can see here, we filled 0.376 where the close was 0.375. So it filled and plus a point. The euro Aussie, you can see here, it gapped up, but it didn't quite fill. You see the close last week was 57861. We've got a low 57866. So we missed it by 5 points. So it looks like the program's working okay. We'll just look at them all anyway. Euro yen close. Euro New Zealand, you can see there. There's the close. There's the open. There's that gap. Euro dollar filled. Pound Aussie filled. Pound Canadian filled. And see, red means gap down, green means gapped up. See, some of those got close, but just not quite. You know, if you use a different broker, it's possible that you got fills. So, by the way, whenever you guys send me a chart, make sure you have this information here on the properties right here. Show, open, high, low, close. Please have that. And send me the whole chart, not just the snippet, because a lot of times some of this information can, helps clue me in to what's wrong. So just send me the whole chart, not just a piece of it. Another fill. Close but no cigar. Another one. Kind of close, but still no cigar. You can see we filled. Dollar Canadian. Gap up, filled. Dollar franc, gap down and filled. And you can see here the yen, almost but no cigar, 0.499, but the close was 0.502. Close but no cigar. But if you had taken those trades, you would still have a chance to take pips. Even though it didn't fill, it barely missed, you could have still exited the trade with pips in your pocket. Looking at the daily, look at this. Holy cow. Dollar yen, 75 on the range, and we've only been open about 5 hours. But what's interesting is it's got the biggest range. Even beats the pound yen. You do not see that often. Buy zone, there you go. Scratch or loss, or a 1 or 2 pip profit. You're fading the, you're fading the gap, fading the pivot. Just didn't hold it. And you see here, anybody taking the short would have paid off. Rat zone is live and swell. So you see here, we're in the green rat zone. Once again, missed pivot. We can see it clearly here. We missed the pivot here. You see this pivot? It got taken out on Friday. This pivot here, looks like they want to take that pivot out. So, and then we have this pivot to contend with sometime soon. But that's how it works. Now, if I remember correctly, how can I find that pivot here? No. I think we had a weekly pivot that was down here last week, and I said, look to take it out. I believe we took it out. Price action. Price action, price action. Okay, we got 3 ball. We go green at the line. That would be a long. Okay, 5 lines right there. If candle would have been green, stalled. That would have been a loss. Here, red at the line. No, that still would have, yeah, that would have been red at the line. And so you could have taken that and made it up. Go see, it went first, it was green here, came back here, right there, boom, breakout of the previous daily session low. You take that, which would also be a what? A wick zone trade. And there you have it. Price doesn't like staying in the wick zone. So you see, this stuff, it just keeps working week after week. I mean, some people still ask which ones to do. Well, you do what you can. If it's in the buy zone, you take a buy zone trade. If it's in the wick zone, you can take a wick zone trade. If it's in the holo zone, guess what? You take a holo zone trade. And as you can see, I just got back in, turned the computer on, but you can see right here, price crossed above, right there, the bid above that low. So price was moving up. I don't know if anybody's actually trading off a tick chart, but if you use my spread dots, it just shows those things. Okay, inventory reduction. Right there was a short. Okay, so we've got, this is the closest long trigger, 111.16 if you're trading the inventory reductions. And these trades, I just look to make a handful of pips off of them if I see one come up. I don't look for no home runs. Just give me a handful of pips and I'm happy. Especially if I can do it over and over and over again. And that's why you can just see when you have trades in play, when they light up. Or potential trades, I should say, not trades in play, potential trades. Once again, more horizontal lines, daily, weekly, monthly, open, high, low for the current and the previous. You just trade with the candle at the line. Bear candles, you go short at the line. Bull candles, you go long at the line. What could be simpler? Why do traders make it so complicated? Oh, and somebody was asking me about support resistance. I mean, yeah, I wrote the TRO, dynamic support resistance indicator, and it does work well. But see, I don't believe in support and resistance anymore because if you change the time frame, guess what? Those dots change. So, I mean, what looks like support on one time frame could be resistance on another. So it's just not to me. I just rarely use it anymore. I can just trade at horizontal lines. I can change the time frame, and these lines don't move. So it's just that simple. I mean, why pick these lines? Rather, just you could just trade the Einstein. You don't even need. You could just say, okay, I started here. Which way is price going? Is it going up or down from when I started? Comes down here, you short, you go there, you go long. I mean, that's simple. Price is going to oscillate, but you say, hey, if it moves this far away, or you can increase these. You could say, okay, I'm going to do a buy zone from where I go. The only problem with that is there's you can't run statistics. You can't run a frequency distribution based on that. You can with the open because everybody knows where the open is. So, but right now, this level, I mean, it's just when I happen to start up the chart. But from here, I can use it as a reference point. Is price moving up or down? You see right there, it hit it. Well, let's see. That's telling me it's selling. It's all red. So I could just take a short right there. Is it going to be profitable? I don't know. It could be. It might not be. But anytime you put a trade on, you don't know if it's going to be profitable. It's a best guess. It's a calculated guess, unless it's just an airball trade. So you could say, well, why not just guess? Well, you are. I mean, you could just open up your chart, boom, either buy or sell, not look at anything, and that'd be okay. Just employ your money management. It would be that simple because you don't know what's going to happen. So if I had taken this trade right now, it looks like well, it is going. It would be going against me. So we can just watch it and see what happens. Well, what happened? You can see H1 turned from red to green. And I think if we would have looked at right here, you can see, hey, it's coming out of that wick zone. But we're saying we don't know anything about wick zones. We're just going to take it. This is when I started. And we're going to see which way price moves relative to where I start. So now it's telling you price is going up from where you started. And it's like it's leaving that zone. So you could scratch the trade in reverse and see what happens. I mean, we're only talking 5 pips. So had you scratched in reverse, you'd be up about 2 pips right now. So, fellow traders, there's the weekly opening gap and just a little more psychology. Controlling your brain yourself is more important than any of those other indicators. It's just that simple because it's not what you trade, it's how you trade it. So let's have a great week of draining the banks.